I think this time is pretty much guaranteed, and any asset that becomes a trillion-dollar liquid asset will have ETFs built on it in some places. It can be used by more people. There are retirement plans, pools of cash, and managed assets that a lot of them haven't been able to get to, and now they can't. It's been a problem that they can only get to it in grayscale because of the inequalities that have built up. Now there's a big opening that lets a lot of money finally escape that big trap and go to places that are better run by professionals or cheaper, among other things. That's why I think that process will happen. Even though the 12 approved spot Bitcoin ETFs in the US are making more people want to buy Bitcoin, many buyers are still wary of these products and how they might affect the biggest cryptocurrency network and its own coin. Some people are worried that Bitcoin could become too centralized, which could lead to it being taken away in the future. Alden Lyn, a well-known investment strategist and macroanalyst, agrees that some of these risks are scary, but she thinks that the benefits are much greater than the risks and that spot Bitcoin ETFs can and will make a huge difference in the continued growth and development of the underlying crypto asset and its network. Bitcoin has always been going to reach this point. I think this time is pretty much guaranteed, and any asset that becomes a trillion-dollar liquid asset will have ETFs built on it in some places. In the United States, we have a certain amount of separation of powers. The SEC lost in court, even though they didn't really want this to happen. That's why people want this, so now more people can get to it. Many people have access to pools of capital, like retirement plans and investments that are managed, but they haven't been able to use it. They can't do it now, and there's like an uneven increase. They have had trouble with the fact that they can only get to it in black. Now there's a big opening that lets a lot of money finally escape that big trap and go to places that are better run by professionals or cheaper, among other things. That being said, I think that process is going to happen anyway. Fears of control are probably not as big as they seem, but that doesn't mean they shouldn't be brought up. But I think that, there was already a big chunk of Bitcoin that was black. It's now going to BlackRock, Fidelity, and a few others. In those places, the general pie is growing at a moderate rate. Many people in those situations would rather do that, but I believe it's more important to make self-custody pretty simple so that people are aware of the risks. But I think it's just that people have more choices now. Many people wanted to put Bitcoin in their 401k, but they weren't able to. These people now have more choices, or they have money with an REIA and that person doesn't want to or can't put some of that money into Bitcoin. They can now. So I think that's basically what will happen. It's going to happen whether it's good or bad. Okay, so I don't see anyone saying, oh, Bitcoin went off track because there are now ETFs for it. It's kind of like Bitcoin didn't make the ETFs. ETFs for Bitcoin were made by the currency system. That's pretty much it. The currency system changed its APIs so that Bitcoin can be used in this way. ETFs are a way to get into different types of assets. They chose to connect to Bitcoin right now. Also, keep an eye out for very large controlled honeypots, like Binance or ETFs. You should know that there is a risk when a lot of Bitcoin is kept in one place. A lot of them are in Coinbase right now. I don't think that's great. That's why I think people should be careful about that. If you're going to hold ETFs, you should probably spread them out among different banks. I agree with you that it is good to take care of yourself, so, we'll see how that works out over time. But I think that was always going to be a stage that Bitcoin would go through if it was going to become as big as it is now. Is there a chance that it will become more popular and get a lot of stupid money thrown at it? It's like it starts to break away from its core beliefs. I'm not just talking about ETFs, I'm also thinking about stupid JPEGs and other things. I mean, I do think there is a risk, but I think it's overdone because I think Bitcoin is just fine the way it is. There's a reason why it has a set block size. I also think that the market forces will pretty much take care of things. I think that if you look at what Bitcoin is, it's basically the most secure and decentralized library that people have ever made. I believe that money is the most important use case for that. If you have a great decentralized open record, money is by far the best way to make changes to it. These days, that's about $100 trillion market. That sounds like a huge market. It stands to reason that there is a huge market for that. Putting a timestamp on other things will show that they have not been changed. You can use for unknown meme tokens. I believe that most of those that's only a few trillion-dollar market, non-monetary use cases for the most unchangeable database. I believe that the monetary use case is much more dense over a long period of time. The market is much bigger, and that is pushed away. There are times when Bitcoin is very popular, but I think that will pass as more people learn about it and figure out what they can do with it. I believe they get tired of it after a while. For the first 15 years, there were no big investors in Bitcoin. The ETFs have helped bring in thousands of them. Those changes are already being seen in prices. Let's listen to more of Alden's chat, where she talks about how strong and hardy Bitcoin is. I learned about Bitcoin for the first time around 2010, and I never used to be one of those people who were against it. I never thought, that's stupid, but I thought, what are the odds that will work or sound cool? It seems like I should spend more time on it, but I never do. Okay, it doesn't really feel anything about it. We're like, I want those guys to win, but what are the odds that this is the money that is finally Hayekian money? But when you see it go through 3 rounds of, a big adoption cycle, it drops by at least 75%. Every cycle it gets better, goes up to a new big cycle, and then goes down again. I would check out the environment and see that the UX was getting better. So I finally decided, okay, I need to take the time to understand this. That's what I did in 2017. After that, I watched the war over block size. And all of that was very helpful. A lot of the time, it showed things like who runs the network and how rigid the rules of the network are. What role do network effects play in this field? Bitcoin is based on control reasoning, so that's what it is in the end. It's a way of things. Is everything stable? You can tell it's true when you see it work in different settings. So when I saw Bitcoin hit a certain level of critical mass and show that it wasn't easily broken, I thought, well, if no one can kill this thing and it's now kind of a critical mass of network effects, then that has macro implications. There is now money that moves faster than paper but is less common than gold. We can say that this has big effects. Like there are 160 different legal currencies in the world. These businesses all have a monopoly in their own area. In a number of ways, they are in charge of that privilege. One is that it's clear that they tax everything in their area except their own currency. 2, they control the flow of people into and out of that country. Okay, before Bitcoin, there were 2 main ways to bring value into a country. One is places of entry, which are certainly pretty simple to watch. Some does get through, but not a lot. The second is sending and receiving wire payments. Of course, they are also watched and managed. On the other hand, if you have internet money, I can send it to anyone in that country who holds up a QR code during a video call. They can send me a way to pay. Anyone in that country who has access to the internet can get money from other countries. So the edges of that money are now a lot less solid, so they don't have to be as tied to their neighborhood monopoly. There are now more ways for people to trade money freely around the world. For the next 3 months, they want the same thing to happen with stablecoins, which means they can say, I want us stablecoins to hold instead of Egyptian pounds. They're all in one place, but it's now a money market. You could say, instead of my local currency, I want something that is pretty stable that I want to hold, so, they'll get stablecoins in Bitcoin if they want something longer term. And that has big effects that break down all of those borders. At the global level, size does matter and liquidity does matter just because something exists. If a lot of people don't understand it yet, it doesn't really matter. In the first 10 years of Bitcoin's life, size didn't really have an effect on society. But it finally got big enough in the last 5 years or so. We're starting to have the same effect on stablecoins. These things are now important on a large-scale flow level. They can now change how currencies work. Because, for example, some currencies are under more pressure, which I think is good because it gives their people more ways to